Hello and welcome to FX Street Currency in Play. I'm Matt Brown. Happy Friday to all you traders out there. And I'm joined down the line by Ryan Littlestone, who is from forexflow.live. Ryan, thank you very much for coming on the show this Friday. Are you well?
Yeah, very well, Matt. Yourself?
Yeah, very well, very well. Actually, quite a bit going on, so we'll crack on with the headlines. We're seeing euro dollar weaker, just dipped below the 118 handle this morning. Really, the dollar has been strengthening, so obviously with the Fed chair potentially being announced over the coming days, and obviously tax reforms as well, it seems like the dollar's coming back to life, do you think?
Yeah, it looks that way. We're definitely seeing some dollar strength. We're up above a fairly substantial level in dollar yen, up above the 113.30 area. We're still hovering about that. We've seen dollar strength in the other core pairs, but against the pound, that's already staged a little bounce this morning. The euro still hovering around session lows, but again, we're not breaking any big ranges. I feel like I repeat myself every time I come on. We're ranging still, and unless we see some of these big levels hit, then we stay in the ranges and we trade between the levels. One thing I am watching very closely at the moment is US Treasury yields, especially the 10 years, because they're really driving the dollar and they're driving dollar yen, that pair. Mm-hmm. And we're up again this morning against a significant level at 2.37%. Okay. And it's a level that's marked a top, going back through to September. And every time we hit there, we seem to struggle. And if we're going to listen to this news, if we're going to believe these rallies based on the news, on taxes, on the budgets or anything, these are the sort of levels we've got to break if we're going to see a proper move in the dollar. And at the moment, we might just be pausing to see what the US do. Asia's had their little look, their little play. London's had their little play. We're probably going to tread water. And if we don't head higher in those yields in the US session, then again, we're at danger of finding another top in the dollar.
Understood, and we'll have a look at the 10-year yield chart in a moment. Other headlines, you already mentioned cable recovering above the 131, and again, eyes on the EU summit, so that's ongoing. You touched on dollar yen, and as you rightly say, inching above this 113 level as the dollar index advances towards mid-93s. Let's have a look at the dollar yen, though, and this is an interesting play with Japanese election over the weekend. What has the market actually just priced in a victory for Abe and nothing's going to change? But it doesn't feel there's any element of surprise or priced into this dollar yen that there might be a shock. Now, yeah. To just talk us through the chart and potentially what that could mean if there is a shock in the elections over the weekend.
Yeah, I think that you're right. The market hasn't played any risk into this. Mm-hmm. I've been watching the 1 month option vols in yen pairs because they're a good indicator if risk is being priced in. Mm-hmm. And why we look at those is because if you see a jump in the vol numbers there, that means it tends to mean there's a lot of hedging taking place. So people are assuming there's going to be big risk. And while that in itself isn't tradable, what it indicates is that after the event, depending on which way it goes, you get a big unwinding of risk. Mm-hmm. If you look at the French elections, there was a lot of risk hedging in euro yen in particular because of Japanese exposure to French bonds. And after that event, when everything went the way, Le Pen didn't get in, Macron won it, we saw a big unwinding risk. And we're not seeing that level of risk being traded on the Japanese elections. So, although that means that it should sail through smoothly, what that does is it switches the picture. It means that if there is a bad result, if Abe doesn't get as many seats as he hopes, if the opposition parties do better than expected, that's the bigger risk now. That's the bigger price risk. If Abe wins, we might get a small relief rally just on the fact that he's nailed it. But if we don't, if it's not a clear run thing, then that's going to hit the pairs and you're going to see dollar yen suffer because of it. Mm-hmm. So you're right, risk isn't really being traded. It's all priced in, but it just shifts the risk balance to the other side. He's already called a Diet meeting, a session soon after. So that's something that they do after elections, usually to just sort things out and cement the victory. But the market's seeing that as he's getting ahead of himself a little bit in sort of thinking that he's going to clean up. So as long as he does, market should be fine. But as I say, if the result isn't as good for him as the market expects, then we're going to see some action when we open up Sunday night.
Understood. And with regards to actually putting trades on now, do you have trades on? Are you looking to put trades on in dollar yen, or is it a case of wait for that election result and then trade on the back of the news?
Yeah, it's not wise to put trades on into a weekend because you've got the risk of anything, let alone the elections. If you're long into this event, then from lower down, then you've got some margin to play with. Again, if you're looking to trade an ABE win, how much value there is in that between now and sitting on a trade when the markets are closed, it's too much risk for me. That's not the sort of thing I like to do. But again, for trading it now, we've got to see what the rest of the day brings and what the US does with all this tax and budget news.
Understood. And speaking of the US, and you've touched on it already, the US 10-year Treasury yields pushing higher, certainly over September, October. Why, and if you don't mind explaining to a few of our FX viewers who probably don't look at the US 10 years, why this is such an important trading product to look at, not necessarily trade, but just to give a feel for where FX markets can go. Yeah,
I mean, US Treasuries always one to watch for FX. Sometimes they have a very tight correlation and sometimes they don't. It depends what else is going on in the world. But I've been noticing recently that we're pretty much in lockstep with yields. And that's because it's an indication of how investors view the US economy. It's a case that the higher yields go, it means that money's coming out of US bonds and going into riskier assets like stocks and such. Whereas, in times of trouble, US Treasuries are seen as a safe haven. Now, traders have been trying to, go short bonds for the last few years, and it's been called the widowmaker trade. And what you want to see in an interest rate environment where rates are going up, you want to see those bonds pushing up towards the 3% mark and over the 3% mark, and that's the big line in the sand at the moment. And as I say, it just shows confidence in the US economy, and that brings money in. So that's why we see the dollar rise as yields go up, because traders are selling bonds and getting into other assets. So it signals confidence in the US economy. But if we don't get those moves up in yields, then the dollar isn't going to follow. And then you've got to ask yourself why. And then, are investors as confident on the US economy as the politicians are there? So again, for the dollar itself, look for the big levels. We look at the chart and we've got those big highs up at 114, 114.40, 60s area. If we don't break those levels, then we're stuck in the range again, and the dollar is going nowhere. Hit those levels, break those levels, then you can start talking about 120 and thereon. Conversely, on the downside, down towards 108, another big support level down there. If we go down to there and don't break the levels, again we're in the range. So sometimes you just got to have some patience and trade the intraday moves, fine, but then keep your eye on these big levels and look to see if we're breaking them or not.
Understood. And finally, let's have a look at the calendar in the meantime, and we've already obviously touched on the Japanese elections, but there's still a few things to get involved in Canada for the loonie traders out there, Canadian dollar traders. We've got CPI data due out at 1:30, Baker Hughes rig count for oil traders, and then FOMC member Mester speaking, and Yellen as well at just gone midnight, if anyone's up on a Friday night to look out for. But again, it does fill into the weekend, Japanese election, and as you already said, just the tax reform coming through. I think they're going to be the key areas. Just comments on that are probably going to be more market moving than any specific macro announcements.
Well, keep an eye on the Canadian CPI numbers, because we're still in a period where any piece of Canadian data that signals a hike or no hike from the Bank of Canada, it's worth a decent amount of money. We saw it move 50, 60 pips on I think it was machine orders the other day, or manufacturing orders, something like that. And that had a big jump, and we saw the CAD gain 50 odd pips. So it's still a good currency to catch a data point on. You know, we get Eurozone inflation data, and the euro moves 5 pips. But for the CAD, yeah, keep an eye on those numbers, because you could get a decent trade out of it.
Fantastic. Well, on that note, Ryan, thank you very much for joining us today, and earlier on in the week. Always a pleasure. Have yourself a great weekend. Look forward to catching up with you next week on FX Street, Currency in Play.
Thank you.